Do you know that the daily trading volume of the Forex market reaches a staggering $6 trillion? Have you ever wondered why this market is so immensely popular? Hello friends, today we've got an enthralling topic to explore, the Forex market. Stay with us until the end as we're going to simplify it for you. All right, let's start with the basics. What exactly is Forex market? Think of it as the heartbeat of global finance. Forex stands for foreign exchange, and it's the largest, most dynamic market in the world where currencies are traded. Every time you travel abroad and exchange your currency for the local one, you're participating in a small-scale version of what happens in the Forex market on a large scale. Just like you exchange your home currency for the local currency you're traveling to, Forex market is where nations, businesses, and individuals engage in currency transactions. Now let's explore the history of the Forex market. Our story begins in ancient times when merchants engaged in currency exchange during trade. In the 19th century, the gold standard provided stability to international trade. In 1944, representatives from 44 nations gathered at Bretton Woods, New Hampshire, to establish a new international monetary order. They created the International Monetary Fund, IMF, and fixed exchange rates against the US dollar, which was linked to gold. In 1971, President Nixon severed the link between the US dollar and gold. It led to floating exchange rates, making currencies fluctuate with supply and demand. This brought flexibility, but more risk and uncertainty. The 80s and 90s brought a technological revolution, with electronic platforms transforming currency trading. In the late 90s, online platforms made Forex trading accessible to retail investors. Regulatory measures were implemented to ensure fair practices and market integrity. And today, the Forex market is the largest, with a daily trading volume exceeding $6 trillion. Now, let's address the elephant in the room. What is Forex trading? Forex trading offers a unique chance to tap into the global Forex market and profit from the movements of international currencies. So, how does it work? Well, it's all about trading currency pairs and not a single currency. When you trade a currency pair, you're essentially buying one currency while selling another simultaneously. They represent the relative value of one currency in comparison to another. For example, Euro and USD, and Great Britain pound and Japanese yen. And here's the kicker, there's no physical delivery involved. The difference between the selling price and the buying price is simply adjusted in your trading account. Currency pair mechanism. In each currency pair, the first currency is the base currency and the second is the quote currency. Now, the price you see for a pair tells you how much of the quote currency you'd need to buy 1 unit of the base currency. For example, if the Euro to USD is 1.20, you'd need 1.20 US dollars to get 1 euro. Why is all this important? Well, these pairs enable traders to speculate on currency pairs' price fluctuations, whether the base currency will strengthen or weaken against the quote currency. It's like placing bets, but with currencies. Let's say you believe that the euro is set to strengthen against the US dollar, so you trade euro to USD to take advantage of the changes in the prices. You'd open a buy trade of euro to USD at the market price. If the euro does indeed rise in value, you'll sell it back at the increased price, making a profit. Bid and ask price. The bid and ask prices are the two key numbers you'll see when you're trading. Let's discuss the bid price. This is the price at which a trader can sell a currency pair. It's like when you're selling an old video game to a store, they'll give you a price. That's your bid. Now let's talk about the ask price. This is the price at which a trader can buy a currency pair. Think of it like when you're shopping for a new phone. The store has a price tag. That's ask price. The spread. Now here's where it gets interesting. The ask-bid spread. This is the difference between the ask and the bid prices. It's a key component of trading costs. The narrower the spread, the better it is for traders. A tight spread means you're getting more value right from the start. It's like starting a race with a head start. Now let's dive into leverage, a fundamental concept in Forex trading that amplifies your potential gains and losses. Imagine leverage as a financial magnifying glass. It allows you to control a larger position size with a smaller amount of capital. For example, with leverage of 50-1, you can control $50,000 position with just $1,000 in your account balance. Leverage is like a double-edged sword. On one side, it boosts your profits when the market works in your favor, yet on the flip side, it can also drastically increase your losses if the market goes against your position. Let's illustrate this with an example involving Trader A. Trader A starts with an account balance of $1,000 and is interested in trading NAS 100 because he anticipates its price will increase in the future. To act on this belief, Trader A initiates a buy order for NAS 100. In this scenario, let's assume the contract size is 1. Trader A decides to use 50-1 leverage for this trade. With this leverage, he opens a buy position for one lot of NAS 100, which has a total value of $25,050. To make this trade, Trader A uses $501 as margin. If Trader A's speculation turns out to be correct and the price of NAS 100 indeed rises by, let's say, 2%, he would make a profit of $501. This profit represents 50% of their initial account balance. However, if the trade goes the other way and the price drops by the same 2%, Trader A can end up with a loss of $501 on this trade. This single loss would reduce their account balance by 50%, leaving them with $499, down from the initial $1,000. Now let's talk about trading platforms. These are the digital spaces where traders execute their orders and access essential market information. Choosing the right platform is crucial, and there are various options available: MetaTrader 4 and MetaTrader 5. They are popular platforms known for their user-friendly interface and extensive technical analysis tools. Now, here's where the importance of a reliable broker comes into play. Your chosen broker provides you with access to these trading platforms. It's not just about technology, it's about reliable trade execution. Your broker ensures that these platforms are not just accessible, but also secure. They enable access to a variety of markets worldwide that can be traded manually or with the assistance of expert advisors to customize automatic trading strategies. Operating hours and global trading session. The Forex market never sleeps during weekdays, operating 24/5 thanks to its global reach and diverse time zones. Key trading sessions include the Asian, European, and North American sessions, each with its own characteristics and trading opportunities. Let's delve into the compelling reasons why you should trade Forex. First and foremost, the Forex market boasts exceptional liquidity, providing traders with a smooth and seamless trading experience. This means that currency pairs can be bought and sold with ease, with minimal price fluctuations. The second reason is flexibility. The Forex market offers traders freedom in executing a wide range of strategies. Whether it's scalping, day trading, or swing trading, the constant availability of the market, coupled with a diverse set of trading tools, makes it adaptable to different trading styles and preferences. Moving on, the Forex market presents a rich selection of currency pairs. These include major, minor, and exotic pairs, each offering unique opportunities. Traders can choose to focus on widely traded major pairs for stability or explore exotic pairs for the potential of higher returns. Next up, one of the key attractions of the Forex market is the availability of leverage. This feature allows traders to control larger positions with a relatively small amount of capital. At last, here's the key. For success in Forex trading, you need a trusted broker. Your broker is your partner, and this partnership can make all the difference in your success. So what does a good broker bring to the table? Well, first and foremost, they offer you a secure platform. You'll get access to a wide array of trading instruments, and your funds will be handled with the utmost care and transparency. It's advisable to go for a reputed broker regulated with a solid regulatory body so that your hard-earned money is safe. So that concludes our first lesson in Forex trading. You've now got a solid foundation to build upon. Remember, practice and continuous learning are key. In our next lesson, we'll explore more about Forex trading. If you found value in this video, please take a moment to show your support by hitting the like button and subscribing to our channel.